So I think we're at a critical point in the stock market, especially with last week or last Friday being quadruple or triple witching um, expiration, and now we're at the final week of September, and you can see the SPY, which is the biggest of the general market. I think it's even bigger than the Dow Jones because it's 500 companies, the biggest company. So um, the SPY is at a critical point, the 50-day moving average, and you can see that in prior tests of the 50-day, you got here, so the first one, two, three, four, five. So this is the sixth test of the 50-day moving average. I think it's actually pretty bearish at this point, because you can also look at the McCullough oscillator on the weekly, and of course, if you're looking at the weekly technical, it is gonna be based on volume, and this volume came in on quadruple witching, which you can say, well, that is not gonna be accurate because you're gonna have a lot more volume on this Friday, which kind of makes it larger than what it should be, but that's not how technical works. Technical works 100% based on data. It doesn't care that you can exclude or write an exception. There's no program that have an exception because it's triple witching and the volume is going to be higher because of the expiration of whatever options, futures, commodities, bond, whatever it may be. Technical is based 100% on data, and the data right now says it's high volume. It's going down. This to the second week that is negative. The McCullough oscillator is negative. So my analysis of course is negative. So I want to compare that with other analysis on YouTube. And this guy says the bulls are getting bearish, so he's negative. And I've looked at Joseph Hench's analysis, and he uses the Elliott wave, which is I don't necessarily subscribe to, but I mean, I'm sure there's a reason for his method, and his analysis also show that there's an intermediate, I guess, correction before another upturn higher. But we don't care about the upturn higher. We care what is going to happen, tomorrow, next week. And his analysis is also negative. So I pulled up another analysis, and this one is with Brian Shannon, and I've seen his analysis in the past, and so I want to see what he says.
We did close below the 50-day moving average. That's happened before this year, and we've recovered nicely. The direction of the 50-day moving average is still higher, but there is zero evidence here on the right that the buyers have regained any control. We have a pattern of lower highs and lower lows. Resistance was met this week on a couple of occasions at the volume-weighted average price from the all-time high that we just registered earlier this month. So, the level below us, next level of interest is the volume weighted average price from the June low. That would bring us down to this trend line as well. That occurs at approximately 438 or so. So I think next week, if we see continued selling, maybe Monday we see selling and then Tuesday we see turnaround Tuesday near that 338 is certainly a level of interest. And the way we want to look at those is the same way we look at any volume weighted average price. We look for evidence that the buyers are in fact gaining control. And once we have that evidence, then we can position ourselves. We don't simply do the foolish thing, what I think is the foolish thing is just to blindly buy the dip. We want to wait for evidence. It's better to be late.
So currently, the first thing I've noticed is he has the 50-day moving average. You can see at this point, this is the 50-day moving average. I think he's using a simple moving average, right here. Well, yeah, no, the green line. The green line is the moving average for the 50. And if you compare his analysis, it doesn't look as clean as my analysis. I think that is also the SPY, and you can look at this 50-day moving average, and you can see it's a lot tighter as far as how it looks with respect to reaction. And that is because I'm using the exponential moving average on the 50, and Brian is using the simple moving average. So when your data doesn't match 100% as um what based on what you're seeing, you should adjust your analysis on your tools, right? You should adjust whatever you see up here, you should adjust accordingly so that the analysis fits better. So he also has this trend line, which goes to, I guess, this level right here, which is, I think, about 338. Now, he says that's where the intermediate target should be. So let's go ahead and take a look at that. And we'll put the crosshair right there. So that's right around the top of this area right here, okay? And so what you're seeing on this line, I don't see that as being anything of significant, to be honest. If I were to draw in a line going across from the top of here, you can see there's a reaction right here, but this hanging candle is a little bit more powerful. So I would move the line a little bit further down because I think this bottom right here kind of lines up a lot better. You can see it lines up with this low, this high, this candle, these candle, and this candle. So for wait, let me draw that again. Yeah, right here. So this right here lines up slightly better than being right here. Now, you can say, well, okay, Brian analysis this is going to go down to this level first, and then at that point, it may go to this level. Yes, but the point being is if you see a reaction at this point, at this level, and there may very well be a reaction, and you try to buy the dip here, you're setting yourself up for a trap, in my opinion. This is a trap technical reaction. And he's drawing in this trend line right here and this weighted average for this period, which I think potentially is a trap. So I would not be buying any reaction at this level if it gets down to here because if you've seen in the past, it's normally gonna overshoot any technical level. It may even overshoot this level right here, but I think if you were to bottom dip, this level looks slightly better than this level because, on a sell-off, like they said, elevator down, you want to be a little bit more conservative and not try to hit it right at a tactical level just because this weighted average, this trend line, this is a trend line, and this weighted average from this low is at 338 doesn't necessarily mean it's gonna stop right at 338 and then bounce up. It's gonna most likely overshoot. Overshoot is very common. You can see overshoots happen very common. So and it's right now it's overshooting the 50. So all the analysis pretty much is saying it's going down. Um,
and right than it is to be early and wrong. As it's also said, it's better being on the sidelines and cash, wishing you were involved, wishing you were out, than it is to be in and wishing you were out. Anyways, the Nasdaq lost a little bit of ground here. It did hold up, better on a relative basis, but I wouldn't be surprised at all to see it come down and test the 50-day moving average, which is found also at the volume weighted average price anchored from that July low. So those two levels coming together at about three.
so 370 on the Nasdaq. Let's take a look at the QQQ on 370, and that's probably gonna get you yes. So that's a good data point. 370 right here, I think most likely is a good test, especially with this McCullough oscillator going down. And this is, of course, on the weekly. You can see it's gonna build. It'd be nice to have. Well, it will, unless it's a bounce. Most likely, there's gonna be a candle down on the weekly, at least for Monday, um, and maybe even Tuesday. So yes, one set 370 right here is a very good target to meet, especially the way it's looking right now. So let's go on.
170. That's something to keep an eye on next week. I would also say draw a trend line that looks like this in case we get a flush underneath it. But here again, we also saw the volume weighted average price off the peak is where we saw the sellers, emerge after this morning. And again, I always look at it and say the direction of the 5 day moving average. We don't want to trust rally attempts until we've seen that 5 day moving average flatten out, and then it makes a higher high above that flat to rising 5 day moving average. So once again, the direction of the 5 day moving average had saved, purchases that didn't make sense. And the Russell 2000, now it's still in this much bigger range, of course, that it's been in for almost the entire year, as it's just frustrated a lot of people in this range bound market, seeming like it's going to break out at times, seeming like it's going to break down at other times. Instead, it just continues to be stuck in a range. And within that range, we're currently below a declining 5 day moving average. So there's no reason to be involved. Next week, if it can do something like this, maybe rally up to the top end of this level, the volume weighted average price off the peak, that is, and then the 5 day moving average starts to swing around and it makes a higher high, then perhaps you can buy as long as it's not extended. I mean, I wouldn't buy it if it went straight up like this Monday. I'd rather see it pull back, create a higher low that we could protect ourselves with a stop against. The semiconductors are still the strongest group out there. They are, yesterday they made a new all-time.
So I think essentially his analysis is the same as my analysis. Overall, everything he's pretty much saying is going down. I mean, hindsight analysis is what I'm calling this is. Hindsight analysis is always easy to see that right now. Once it's formed that, yeah, okay, we're in the weekend, we're looking at it, it looks negative, everything's looking negative. Let's take a look at the Dow Jones. Yeah, so it's gonna, this is a magnet point, so most likely once it reaches, it's gonna penetrate a little bit. And this is really the first time it's going to hit the 100. So I would say, if you were to bottom dip, bottom, I mean, bottom dip is always dangerous, right? Because just because this is the first time it tests the 100 in like forever, and you can see this is like the last time it tested 100 on the first test, right? I don't look at this one because this is like the second test, so this is a second test of the 100. That's why it penetrated so low. But the first test of the 100, it bounced slightly, right? It bounced just slightly. So, right, where is this? 100, right here. Bounce after. I mean, it penetrated just slightly. So a slight little penetrate. Then you got this doji top or doji bottom, which is a reversal candle, and then you got reversal, and then you got a failure, and then you bounce around, and then then it goes almost to the 200. So I would say if you were to bottom dip, on the Dow Jones compared to like the S&P or the Nasdaq, just because the Dow Jones is gonna be a little bit safer. So the Dow Jones is what, 30 stocks. So any of the top performing 30 stocks, if you don't want to just get the index, you can just look at the top performers, and that would be what I think would be the best pertinent things to do. I think I already did the analysis for all the other stocks, so I'm not gonna take too much of a look because they're all, Apple's looking negative and everything. So we'll leave it at that for now. I think, we're gonna have to just say Monday is gonna be negative, and then either depending on how negative Monday is, if Monday is really like a low of day Monday, then Tuesday would be the initial sell off, and then you get turnaround Tuesday. If Monday is more like a technical Monday, and then Tuesday would be the sell off, then you get, the classic reversal Wednesday. So it all depends on which day is going to be the sell off, whether it be Monday, Tuesday, or Wednesday. Now, normally it's not going to wait till, waiting till, I guess, Thursday is a little bit long, especially the way this technical is. The sell off is going to be either Monday, Tuesday. Man, calling Thursday is also late, so we'll see, right? My expectation is either, I'm thinking it's gonna be technical Monday and then sell off Tuesday, to be honest. So that's what I think is gonna be technical Monday, because it's like everybody's expecting it to go down to this 50. Everybody's expecting it to break this 50 on the SPY. So I would say technical Monday, and it'll kind of like gives you a head fake, and you think like, oh, it's gonna bounce, and then Tuesday will be sell off Tuesday. Then you got reversal Wednesday. I don't think it's gonna be, but it could very well be. I mean, you'll know right away because they'll hit it hard in the morning on Monday. If it's a sell off Monday, they're gonna hit it hard on a gap down. It's gonna be a gap down. They're gonna hit it hard, and you know right away that you're gonna have to chase. If you feel like chasing, you're gonna have to chase because chasing is always difficult. Because when you chase, guess what? This is it's Microsoft, but any options when you chase is gonna be a lot more expensive because the VIX is gonna be higher. So this VIX right here is gonna be higher. And so the options already, when it opens up, this VIX is going to be up here, so the option is going to be more expensive. So chasing is always like chasing higher option value. So it's what people do in this kind of environment. It's most likely always going to be, when it's sell off, it's going to be a gap down and then a initial flush type of sell off where this VIX is going to be all the way up here, wherever it may be. You never know how high it's going to get or where it's going to stop. And it's always feel like chasing, and it's going to be difficult. That's just the way it is. And that's why I don't like to chase because, I mean, the option is always higher. And if you do chase, you hold it for 5 minutes at most. You just get 100, 200, 300, and you'll be happy with it. So it's gonna be fairly easy to see whether it's gonna be sell off Monday, technical Monday, and then sell off Tuesday. But it's either Monday or Tuesday is gonna be low of day. In my opinion, it's gonna be low of day either Monday or Tuesday. Then hopefully it's gonna be reversal Wednesday where you get a flush below, you get an initial flush below this 50, and then during the afternoon or whenever it may be, maybe even closer to maybe the late morning, like right at noon. Right at noon is when they're able to stabilize it and then turn it around for reversal Wednesday. So that is my analysis.